Hello and welcome to TheoTrade. My name is Doc Severson and this is the Theo Night Report for Thursday, July 28th. All right, we've had a very flat market for at least the last week or so, and it's kind of driving people crazy, wondering when the market's going to do anything. So after a huge move after the British exit, first down and then back to the upside again, we've been stalled out. And this is very common where we see markets go through this period of range expansion into range contraction. So we've just been going flat here for a number of days, and I would expect to see this maybe as of tonight. I would expect to see a market resume its uptrend tomorrow. We'll see if that happens based on what happened after market today with earnings. Okay, so a couple of behemoths just reported after hours. So here is Amazon. So Amazon, if we look at the options that are expiring tomorrow, we had about a 47-point expected move between now and tomorrow at the close. So 47 points, plus minus 47 points. So that's a pretty big expected move. You can see how the implied volatility is just massive right now and then starts to taper off as we go further out. But that's not the only fun. We not only had Amazon, but we also had our friend Google. So some of the largest market caps that are out there reporting after hours, you can see with Google, again, with tomorrow's options, if we go over here, we can see that it had basically a 37 point, plus minus 37 point expected move into tomorrow. Did the surprise or disappoint? Let's take a look. Okay, here's Google, and I've just got this on an intraday tick chart so you can see how explosive this move was after hours. So we basically ended up the cash session with about a 765 print. And remember what we talked about, the expected move being about 37 points. So if we add that on there, we're going to have about 802 as our target to the upside for Google. Look at where it is right now. So it's at that very edge of that move at round number resistance at 800. So certainly we'll see movement in that stock after hours between now and tomorrow morning's cash open. But just to let you know what's going on here, if we look at this earnings here, we had 842 actual versus 647 estimated. So completely blew these earnings out of the water. Now, if we look over at Amazon, we had slightly different picture at Amazon, and the situation continues to be very fluid with Amazon because we've had movement all over the place. So if we take Amazon's closing price of about $752, we can see that if we apply that expected move of about 47 points, we can see that the upper target's pretty much plus minus 100 points, right? So we're almost at the point where we can say if this was about 750, we'd be looking at about 800 points to the upside and 700 points to the downside. So in this case, actually, there was such a huge expected move on this guy that it's actually stayed within its one standard deviation range. So again, just to give you an idea for Amazon in this case, Amazon is now starting to make some profits, and 178 actual versus 114 estimated earnings per share. Pretty big beat on that number, at least for the bottom line. Now, as this relates to the larger market that's out there, here's the SPX, and this is a good proxy for the entire market for us to look at. We still have trend moving to the upside here. On the monthly chart, we still have trend moving in this direction on the weekly chart, and we have been stalled out here on the daily chart. So this is very, very common to see the larger time frames, in this case, showing a lot of momentum, right? But we have the daily chart. It's almost like a child getting tired when the parents are on a road trip, right? The kid is going to fade fastest, right? And going to start to melt down, and you got to give the kid a rest, and then you can continue. So in this case, what we're seeing here is if we zoom in on this area here, we're seeing this very characteristic sideways consolidation for a number of days now. So this has been going on 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, maybe as far as 11 days. So this is almost 2 weeks where the price has made very little progress. I think this will come to an end, and more than likely what we're going to see is that these earnings coming in from Amazon and Google may kickstart the rest of the market to start to go into that final, what I call a parabolic tail. Very common for the price to come very strong off of a bottoming formation and then rocket higher, and this is basically where the ball or the baton gets passed between the bears that are bailing out and buying back their shares, and this is where the institutional longs will jump on board. The retail longs are typically not on board yet. So they're standing to the sidelines, kind of dumbfounded watching this whole thing come along. And at this point, what we generally figure out is that the market begins to accept the fact, the retail market, I would say, does begin to accept the fact that the market at this point is heading higher. And at this point here, typically this tail that we see is where we get people chasing after the move. This is the euphoria. And that euphoria may come in after tonight's earnings between Google and Amazon. We'll see whether this translates or not. Now in our room, this earnings cycle, we've gone over a lot of examples talking about earnings trades. So since the earnings cycle has started around the beginning of July, about a month ago, we've spent a lot of time talking about earnings trades. And one of the points that Don has made over again is that with him watching thousands and thousands and thousands of retail investor trades around earnings, really there is no edge around selling options. So selling an Iron Condor, for example. So even these two examples would have been probably okay. We'll see what happens by tomorrow by the open, but probably it looks like they're staying within their 1 standard deviation range. And so there's very likely we could have set the wings out there 1 standard deviation. However, even if we had done something like that, though, it's very unlikely that we would have been able to build an Iron Condor that was a 1-to-1 reward to risk. And so when you have a situation like that, all it takes is that one trade where you have that 3 standard deviation move, that fat tail event, that completely blows you over and takes away the profits of several different trades. So what we have been recommending lately is just these simple in-out spreads. So if the rest of the market is generally heading higher, or if you have a positive bias on something like this, just setting up an at-the-money call spread, call debit spread, it's just a very simple way to handle this trade. Especially since the fact that these trades have very benign volatility and time decay arrangements here. Very benign with that, so it's very easy to handle this. You don't have as many moving parts, which is really one of the biggest issues right around something like an earnings release. So you don't have to worry about volatility compression. You don't have to worry about time value decay if you're taking a directional trade. So you can see that this one that we set up just before the close on Amazon looks like it's going to be a profitable trade as of tomorrow morning. And the same thing was done with Google. And this one here, we set this one up right around the 765 area, and this one is already well out of the money. So this one is also doing just fine. Again, we're not trying to think too hard about these trades. We're just trying to take the overall direction of the market, or in this case, the overall bias of the charts. So let's apply that to Google. Let's go over and build a simulated earnings trade if we had done a condor on something like Google. So remember, the expected move on this was plus minus 37. So with about a 765 closing price on Google, if we add 37 points to that, that's about 802. So that's 802 to the upside, and 765 minus 37 points would be about 728 or so. So let's apply those strikes. Let's see what we can do here. So let's say maybe a 727 and a half, 725. So we'll start out by analyzing selling an Iron Condor here. So 727 and a half, 725 on the bottom. All right, and then we'll go up to the call spreads, and then we're going to look for maybe 802 or so. 802, 802.5, 805. 802.5, 805. And let's see what kind of credit and shape for this trade that we could have done. All right, so it looks like we're getting about a $1.25 credit on spreads that are 2.5 points wide. So it looks like actually, and again, we don't know how accurate these are. Chances are we'd probably get a little bit less credit than this, but this looks like we'll probably get about a 1-to-1 reward to risk on this trade. Okay, so you can see right now where the price is right now is pushing the envelope for that upper bound. So even though we're setting for a 1-to-1 reward to risk on this trade, we're setting up the strikes just outside of the expected move where the price was. We're going to be sweating this one out if we had traded this one to sell premium. So compare that type of trade where we're selling that premium, which is traditionally regarded as the safe way to trade earnings. And even this isn't a bad setup for this. Many earnings trades have much less premium than these guys. So typically we're looking at reward to risk curves that are more like this, more like, looking for a small credit with a wider Iron Condor, and the shoulders are actually, showing more risk than that. So this is traditionally what we're doing when we get our strikes outside of here. This one isn't bad, but you can see that even though we have set our strikes outside the expected move, it's blown past that expected move now after hours and continues strengthening. So compare that again versus the simple debit spread that we set up with just a simple bias, and we can really fine tune our risk on this trade. So again, the least we're going to do on something like a big stock like this with big strikes on this is going to be maybe about $1.25 per contract or so. So this is what we're risking on the trade and seeking about $1.25 on the other side. So hopefully you agree when it comes to risk events like this, simpler might actually be better. That's it for tonight's report. Thanks for listening, folks. Have a great weekend. We'll see you soon.